Welcome back. You're still watching the India development debate, and time to put the spotlight on the big voice that we have for you this evening. Mr. Jayant Sinha, Minister of State for Civil Aviation, joins us right here. He's also in his capacity as someone I rely on very heavily in the government who understands both the fiscal and the economic landscape. Thank you very much, Mr. Sinha, for joining us all the way from Hazaribagh. We understand the pulls and pressures of being an elected representative. So yes, we will bear with the time loss, but thank you very much for being with us. My first question, I'm not going to waste too much time. The government and the RBI have stepped back from brink. But there are many who insist that this uneasy truce has been forced by political optics, but the government couldn't afford to be seen at war with an institution like the RBI anymore, and not when there are so many state elections around the corner.
Supriya, I wouldn't agree with that characterization. Of course, in the media, there is always this desire to sensationalize and talk up differences. But the reality is that every elected government and every central bank, whether it's in India or around the world, has some very healthy, constructive tension built into the relationship. And as you know, policy making is not a science, it's an art. And therefore, to decide, what the necessary policy moves should be, what their timing should be, the degree to which you do that, there is always a healthy debate around those kinds of matters between a government and the central bank. And that's really what we are going through right now. There are very substantive issues around the table, issues around liquidity in the financial system, the stress that we have in the financial system around NPAs, both in large enterprises as well as small and medium enterprises. There are questions about the economic capital framework that the Reserve Bank of India has been following. These are very substantive policy issues that require a very serious debate between the government and the central bank. And that's really what we are witnessing here just now. What I think we've achieved in the discussions and the deliberations is action on the items that require urgent moves, and the ones that require deeper study, the ones that require more analysis have been sent to expert committees to be thoroughly analyzed and then to have action taken on those.
We'll talk about those committees in just a bit, but this meeting happened with the overhang of should RBI be made an institution governed by a board, run by a board, so to say. That hasn't happened, and many people are breathing a sigh of relief there. That was conjecture, and that overhang is over. But the 5 references to the board in the very terse press release that came is perhaps an acknowledgement of the board's growing role and influence. The counter question to this is, RBI is an institution that needs specialists. The governor, the deputy governor, and their roles are all specialists. Can the board members afford, who are non-specialists, talk down to them? And we've had exemplary people be RBI governors, from IG Patel to Manmohan Singh to C. Raghuram Rajan. I mean, some of those people with global repute. Can a non-specialist board be made to talk down to them, just to settle the the debate on a board-run institution?
We have Supriya, but Supriya, we have exemplary people on the board of the RBI as well. I mean, of course, we have the DFS secretary, we have the DEA secretary, who are very experienced, very senior and seasoned bureaucrats who've had a long track record of economic decision making in government. They are there for sure. But then we also have very, very senior, eminent people on the RBI board, including people like Shri N. Chandra, who, of course, as you know, is chairman of the Tata Group. We have people like Mr. Bharat Doshi. We have people like Mr. Gurumurthy, who've thought hard and long about the Indian economy, and many other very experienced and eminent people drawn from business as well as from academia. And as I said, it's very necessary to have a healthy and constructive debate. And frankly, Supriya, it's important, particularly during this time, that we think about creative solutions, we think about unconventional solutions, because we have to navigate our financial system through some very difficult times. NPAs are obviously at a high. Obviously, we have liquidity issues right now, particularly post ILFS. So these are times that we have to think through the full range of solutions, creative solutions, unconventional solutions. And again, if you go back and you think about what happened during the global financial crisis, the central bank at that time, which was the Federal Reserve, and of course the European Central Bank, did unprecedented things. I mean, things that are not in any textbook, things that had never been done before. And it was because the governments of that time, the Treasury Secretary Hank Paulson and Ben Bernanke as the Federal Reserve chairman, they sat down, they figured out practically what the issues were, and then took on some very unconventional approaches. That's teamwork, that's collaboration, and that's really what we're seeing in action right now.
No, I agree with you that this, I mean, any management, whether fiscal or monetary, should be done with a collaborative approach. A consensus should be the motive. But, you know, by all means, the RBI should have heard the board. It should have kept an open mind. That's exactly what the RBI is expected to do, because it is the elected government of the day that's responsible to people. The RBI should have absorbed everything. But shouldn't the ultimate decision have been left at the RBI to be done at their own pace, own time? Because, sir, the reason why I'm asking this question is that because you know, there is this sense that the relationship between RBI and government is one of subordinate and superior. You've been somebody who's exposed to the markets. You understand for fiscal and economic landscape a lot more than many of the people do. The two play a very different role, and the sense one gets is that this basic premise has been undermined, that they are a subordinate and superior, whereas in reality they are far more equal than any other institution with the government.
Supriya, we have to look at it both in terms of the legal situation, we have to look at it in terms of the actual norms that have been developed over decades, and then we have to look at the practical situation that we have on hand right now. Legally, of course, as you know, the RBI is an institution that the government can direct. Legally, that has been the case. That's the way the RBI Act is set up. However, as I said, the norms have been, and this has been established over decades, that the RBI has very significant, and we have enshrined that through the MPC, independence as far as monetary policy is concerned, and as far as exchange rate management is concerned. There are many areas where the RBI is fully independent. There are also certain other areas, such as, for example, how to promote growth, credit growth in the economy, the supervision and regulation of the banks, where there is in fact a close collaboration and a close discussion that happens and has happened consistently over time between the RBI and the government. And that's when we come to the third aspect that we have to consider, which is what is the practical situation that we are facing right now. The practical situation that we are facing right now is that we are dealing with a vast stock of NPAs that we inherited from the previous government. We are dealing with a liquidity shock that has happened post ILFS, and we are dealing with a situation where we have to ensure that the Basel criteria are implemented in the midst of this liquidity shock, in the midst of this NPA situation. So given the practical circumstances, as I said, what we are seeing is a collaboration, a constructive, a healthy collaboration and discussion between the RBI and the government, taking into account the institutional framework that has actually developed in India over the decades. And I think everything that we've just seen right now is really consistent with that institutional framework that has developed over decades. I can point you to many, many incidents in the past, Supriya, where there has been debate, discussion, and a difference of opinion as well between the government and the RBI.
No, fair point. Let me just get down to substantive issues. I realize I have limited time with you, and one of the issues has to be on reserves. And unlike a lot of other people out there, even when we were reporting on this RBI board meeting, we chose not to use the phrase raid on reserves. I mean, truth be told, this is the government's equity that rests with the RBI, and there are no two ways about it. But the suspect on this was that the demand for reserve transfer was being made in an election year, and that raised doubts on what it could be used for. Could it be used to fix the deficit on one hand, or finance a pre-poll SOP? So in some sense, a committee is now going to look at it. Those apprehensions perhaps have been addressed, but you know, there's already been a practice where additional surplus is being transferred since fiscal year 14. Why fix what ain't broke?
Supriya, on this particular issue, I want to directly challenge Mr. Chidambaram, who has been very vocal and I would say quite inflammatory in his comments on this matter. Those of us who take these matters very seriously, and I'm sure Mr. Chidambaram does as well, recognize that when we talk about these matters, particularly when we talk about the institutional framework of this country, we have to be deliberate and mature and thoughtful in the manner in which we express ourselves to the media and to the general public. As you have seen in what has transpired in the RBI board discussions, it has been agreed that there will be an expert committee that will deliberate on this matter of economic capital that the RBI needs to have. I'd like to remind Mr. Chidambaram, and I'd like to remind all of your viewers today that the discussion of the economic capital and the reserves that the RBI should have is not a discussion that has just started today. And certainly it is not there to address the fiscal deficit or any other short-term issues. This has been a long-running discussion. When I was in the finance ministry, we had multiple rounds of discussions with the RBI as to what the appropriate level of economic capital for the RBI should be. We all agree that the RBI should have a fortress balance sheet. The RBI should be prepared for every contingency. But then again, we have to look at other fortress central banks, other central banks that are very well provisioned when it comes to their capital reserves, and applying those benchmarks, see whether there is an opportunity to be able to move some of the reserves to other purposes. I'm not necessarily even saying that should come to the budget. There are many other purposes like recapitalizing the banks or putting money into a sovereign wealth fund. Many ideas have been mooted as far as this is concerned. So this is a long-running discussion that has been happening. It is part of this discussion that we would like to proceed with the RBI to establish what an appropriate reserve level should be, and it has to be done in a technical manner with experts getting the best advice around the world as to what RBI should be maintaining in terms of its reserves. Therefore, to jump into this from a very political perspective, to use inflammatory rhetoric, I don't think is something that reflects well on senior policymakers.
No, the reason why I asked this question is not just because Mr. Chidambaram has said what he has, and you have every political right and as a policy maker to refute him, but this is also a concern raised by former Governor Raghuram Rajan, who was with us before the board meeting, and he said it has repercussions, and which is why I asked the question. I'm glad you believe that technical advice is required on this. I'm glad you believe experts need to put their mind to this, because this issue needs to be addressed in a more technical, mechanical and objective way. It keeps coming up before every election, and not just with your government, even governments in the past. But let's turn focus and talk about PCA, and the RBI has agreed to review the prompt corrective action framework for weak banks. Many people believe some of those banks are flush with deposits. It's only fair that they lend. The counter argument, sir, to that is, won't any lowering of guard of PCA keep credit delivery systems suspect? We've blamed the RBI for looking the other way when NPAs got created in the previous regime. Are we making them do that all over again?
You're absolutely right, Supriya. Lending and lending to good borrowers is something that all of us believe in. Nobody is saying in any way that you need to dilute your underwriting standards. Obviously, those have to be maintained, and because they were not maintained in the past, Mr. Chidambaram knows that better than anyone else. That's why we have landed ourselves in the mess that we are right now with these banks, because of the massive amount of NPAs they've had, because of the very lax underwriting and credit standards. So nobody in any way is saying that we should relax that. The Honorable Prime Minister, the Honorable Finance Minister have repeatedly said that. That being said, we do have to have credit flowing into the economy. We are growing at an 8% plus rate in real terms. Inflation is running between 3 to 5%, and therefore nominal growth, of course, is around 12, 13, 14%. When nominal growth is running at 12 to 14%, Supriya, credit should be growing faster than that. And so we need to be able to ensure that we can provide credit to our legitimate borrowers, to our good borrowers, and therefore, we need all our banks banks to participate in that. As Mr. Gurumurthy has said, we are a bank-led economy by and large when it comes to financing. And therefore, the role of the banks is very important. Now, the banks are taking on these deposits, as you correctly pointed out. They are flush with deposits. They've taken on these deposits, but at the same time, they can't lend. Obviously, they have to lend with the right underwriting standards. And this is part of the tight liquidity that we have in the financial system right now, where credit growth is not moving as quickly as it should. And so, as I said, it's a time to think through all options and to consider what we can do to really accelerate growth even further.
No, I'm glad you spoke about credit offtake, but one of the things that the RBI has also agreed to is consider a restructuring scheme for stress loans in the MSME space. You, somebody who understands the next argument that I'm going to throw forward a lot better than many other people in this government, which is ratings agencies. And Moody's has red flagged that move, stating that such relaxations, and if I may quote them, have largely been unsuccessful in addressing the underlying stress. They go on to say how this makes lending, far difficult, underestimates the extent of underlying asset quality. Are you somebody who's going to take that concern on board? Is that a legitimate concern?
I mean, of course, it's for the people who are handling these issues to be able to decide exactly how they want to proceed. But I think anybody who is in a policy-making role recognizes that it is a multi-dimensional situation. You do want to be able to provide appropriate relief for borrowers if indeed they are in stress. But at the same time, you have to ensure that you're not overly relaxing your credit standards and weakening your banks further. So obviously it's a multi-dimensional problem. Obviously you have to look at it case by case, and this is part of what the RBI will need to do, is to come up with the appropriate mechanisms, the appropriate protocols by which more credit can flow into the economy, while at the same time recognizing where it is that the loan will not come back. So all of that has to be taken into account. Now that's for the RBI to do. At the same time, what we in government are doing are working on establishing a supportive policy environment in industry after industry, therefore to relieve the stress that exists in some of these industries. You can see what we've done for exporter refunds, you've seen what we've done for ease of doing business, you've seen what we've done for MSMEs. Obviously in the aviation sector, for example, we are working on creating a supportive policy environment. So government has a role to play in terms of the policies for the different industries. RBI has a role to play in terms of the credit standards and the kind of restructuring parameters that they put in place.
No, absolutely. The only question here is, should PSU banks be asked to put on loan mailers? And I'm quoting somebody you know rather well, former Finance Minister Jayant Sinha there. But let me move on. And I think what left me very perplexed after this meeting, Mr. Sinha, is that it was such a big battle over NBFC to begin with. No word on that. And Rajiv Kumar, the Niti Aayog Vice Chairman, was on the channel, and he's worried about it. And he says this NBFC fund crunch may actually impact the second half growth figures. Are you surprised that NBFC and a lifeline for them wasn't discussed in this meeting? At least doesn't seem to have made its way into the press release and official communication.
I'm sure it was discussed at length, because this is a very urgent matter. What the policy action on that should be perhaps is still being worked out. Obviously, as far as government is concerned, we've already undertaken certain policy actions. But again, as I was saying earlier, Supriya, you have to understand the current context. And the current context is that because of ILFS, we've had a liquidity shock in the market. And the liquidity shock is that you have a very large NBFC that is having tremendous trouble in servicing its paper, servicing its debt. When a situation like that happens, obviously everybody pulls in their credit, everybody pulls in what they're putting out in the market. And so we have a situation where there is a tightening in the market. Under those circumstances, you have to do certain unconventional things. You have to ensure that there's sufficient liquidity on the wholesale side where the NBFCs are borrowing. And I very much want to emphasize this, Supriya, because as I've been reading the debate and listening to the debates, I don't think people are paying enough attention to the disbursement side. So even though we have to worry about the wholesale financing and the liquidity side, on the one hand, we have to be equally concerned about disbursement, because if NBFCs now are hoarding cash, if they're strengthening their loan books, if they're strengthening their balance sheets, their disbursements go down. And I think this is what Mr. Rajiv Kumar is highlighting, is that when disbursements go down on the lending side, that is the lifeblood of the economy, particularly for the MSME sector. And when that dries up, when the disbursements dried up because you're being very careful and very prudent, then you really start to choke the economy.
It's going to have an impact.
That is a very serious matter. So we have to work the wholesale financing side, and we have to work the disbursement side as well.
Mr. Sinha, quickly, two quick questions, and I'm going to keep it brief because I know you've got another appointment, but the two more contentious issues, and one of them, of course, is liquidity for the NBFCs, and of course, the supervisory committees that should be set up to oversee RBI decision-making. These are two contentious issues. One believes this is simply a ceasefire of sorts that we've seen. Do we expect fireworks on the 14th of December, or do you believe the display of maturity one hopes will continue on both sides?
Well, I'm sure the media wants headlines, so I'm sure you'll whip up the fervor. I'm sure you all will drive up the excitement around that. But again, as you just saw in the board meeting, we have a very eminent, very thoughtful, very capable board. We have really good, solid experts, very experienced people at the RBI, and whatever the issues might be, as I said, there is a healthy tension and constructive tension between the speed at which government wants to issue and deal with certain matters and the way RBI would like to deal with certain matters. And so all of that will have to be worked out. I think the right people are having the right discussions, and therefore I'm sure we'll see the right outcomes as well.
Absolutely. Thank you very much on that note, Mr. Sinha, for taking time out and speaking to us all the way from Hazaribagh. Thank you very much for sparing time, because one of the greatest achievements of successive Indian governments over the past couple of decades has been to increase the RBI's institutional independence, including your own. You've set up the MPC. Let us not reverse the trend, because at the receiving end will not just be the RBI, but India's institutional stability. But thank you very much, sir, for sparing time and speaking to us right here on ET.